smart business owner you are, and you can't emotionally take the fact that you're spending so much in taxes. You call me, you call your CPA, your tax strategist. You have a business, an active business. It's like your first time making like millions of dollars. You owe $1 million in taxes. Oh my. But you haven't done anything. It's November. We're at the year end. What can you do, Mr. Mindick? What can you do to save me on taxes? I can't write a check for $1 million. Well, the good news is there's things you can do. The bad news is I wish you would have called me in February. You knew you were going to have good taxes because the year before you had taxes. So what are the couple things that you need to do? One of the best things to do is buy real estate. Because with real estate, certain types of real estate can be automatically offset your active income. Real estate by default is passive. So the long-term rentals, if you're not a real estate professional, if you're not married and you don't have a real estate professional status wife, like a status symbol there, then you're kind of screwed because active income, passive income, you can't offset each other. So you got to make that real estate income, which is really a loss because in the beginning years, you take a loss, cost segregation, you really got this huge loss. The whole point is so you can try to offset your active income. There is a side point that you're going to try to grow your wealth, which people don't understand. They're just trying to save taxes, which usually mixes them over. Remember, if you want to buy an asset, a good investment, take time to find a good one. Don't wait until the end of the year. You got to close because you really got to close and get that rental property, the short-term rental or the hotel or whatnot before the year end. So you're going to scramble. You're going to buy something, probably overpay for it because you emotionally can't pay for that $1 million tax bill. It's tough. So sort of plan early, find and identify that investment. It could be even just another business. Another idea, I had a guy come in the other day and he has a business, and part of his business is that he will invest. Instead of people paying for his services, he's going to go and say, you know something, you can't pay for me, you're a startup. I'm going to help your business grow, but I'm going to get a piece of that. Okay? So it could be an idea, and I'm developing this idea that when you get paid for that advertising or marketing that you're providing for those businesses, that's active. But if they can't pay you, and the way they pay you is giving you a part of the investment, and then it's like you're not really doing anything afterwards. So you're a passive investor. Perhaps instead of them telling them to pay you into your active business, why not have them make you a passive limited partner in their partnership? You're not doing much. It's just you kind of earned it, sweat equity, whatever you want to call it. Now you have passive income. Now you buy real estate. Now you don't have to worry about getting married and finding that woman. I mean, you should do that anyway. I mean, that's not tax advice. That's more of like family wealth building and just having a normal life. You don't have to try to prove to the IRS that you're a real estate professional because you're really working full-time in your marketing agency. Follow me for more tips and tax strategies. There's so many little nuances here. We can't cover them all. That's why you sit down with us. We talk to you. We work out all the details. We come up with some out-of-the-box solutions, and we show you. You do this, it's great. If you do that, it's risky. It could work. Or, sorry, you're out of luck. But next year, maybe we can do better. Follow me for more tips and strategies from a real CPA who does tax strategies for small business owners.